Hey, I'm Sai. In this video, we'll clearly understand today's topic, why it matters, and break it down step by step so it's easy for everyone to follow. Today, we're exploring the real-time payments revolution happening all around the world. Real-time payments mean money moves from one account to another in just a few seconds. This is very different from traditional bank transfers that can take hours or even days. We will focus on four major systems: UPI, FedNow, PIX, and SEPA Instant. These systems are changing how people, businesses, and governments move money every day. Real-time payments matter because they give people faster access to their own money. They also help small businesses manage cash flow and pay suppliers on time. For governments, real-time payments can support welfare programs and emergency relief. In this video, we will follow a simple roadmap to keep everything clear and easy. First, we will understand what real-time payments are and how they work in general. Second, we will look at the core technology like payment rails and settlement. Third, we will study four real examples: UPI, PIX, FedNow, and SEPA Instant. Finally, we will discuss risks, challenges, and where this revolution might go next. Around the world, instant payment systems are growing fast in 2023 and 2024. India's UPI now processes billions of transactions every month across many apps and banks. Brazil's PIX has reached most of the adult population and is used for daily life payments. In the United States, the Federal Reserve launched FedNow in 2023 to enable instant transfers. In Europe, new rules are pushing banks to offer SEPA Instant for euro payments by default. We also see global experiments linking systems like UPI with other countries' fast payment networks. This video is for education only. It does not give personal financial advice. Now, let's start with the basic question: what is a real-time payment? A real-time payment is a bank transfer that is processed and confirmed almost instantly. It usually moves money directly from one bank account to another bank account. These payments run 24 hours a day, 7 days a week, including weekends and holidays. Once a real-time payment is sent and accepted, it is usually final and cannot be reversed easily. Real-time systems are typically push payments, where the sender initiates the transfer. This is different from pull payments, like card charges, where a merchant pulls money from your account. Most real-time payment systems use a central platform or switch that connects many banks together. The platform routes messages between the sender's bank and the receiver's bank in seconds. Real-time payments are not the same as traditional wire transfers or batch ACH payments. Older systems often process in batches, so the money appears only after some delay. Cards usually sit on top of card network rails, while real-time payments use new account-to-account rails. With account-to-account rails, money moves directly between bank accounts without card networks in the middle. Many countries brand their real-time system with a local name, like UPI or PIX. But behind the brand, the core idea is very similar: instant digital bank transfers. Most real-time systems support small everyday payments as well as larger business payments. They often set transaction limits to manage risk and protect users from big fraud losses. Some systems allow request to pay, where a business can send you a payment request to approve. Others add features like recurring payments, bill payments, or simple refunds on top of the core rails. To understand real-time payments, it helps to see the key players involved in each transaction. There is a payer, a payee, their banks, and the central infrastructure or payment switch. When you send money, your bank sends a payment message to the central switch. The switch forwards the message to the receiver's bank and waits for an approval response. The receiver's bank checks the account, runs risk checks, and then accepts or rejects the payment. If accepted, Both banks update the balances in their systems within a few seconds. In the background, there is also settlement between banks, usually through central bank accounts. Some systems use real-time gross settlement, where each payment is settled one by one. Others use deferred net settlement, where many payments are grouped and settled together several times a day. Most modern systems use the ISO 20022 messaging standard to structure payment data consistently. Security is critical because once real-time payments are sent, stopping them is very hard. Banks use strong customer authentication, such as PINs, biometrics, or one-time passwords. Many systems limit high-risk transactions and use machine learning to detect unusual patterns. Real-time payments must also follow rules on anti-money laundering and counter-terrorist financing. Regulators often require banks to do strict identity checks before giving access to these systems. Some countries cap the amount a new user can send until their behavior looks trustworthy. Because payments are instant, customer education about scams and social engineering is very important. Dispute handling is different from card chargebacks and often less friendly for the payer. Many real-time systems are also designed to be low cost to support financial inclusion. Governments hope these systems will reduce the use of cash and bring more people into digital finance. Let's start with UPI, which stands for Unified Payments Interface in India. UPI is a real-time payment system that connects banks, apps, and merchants on one common platform. It's run by NPCI, a non-profit company set up by the Reserve Bank of India and Indian banks. With UPI, users can link multiple bank accounts to one app and switch between them easily. UPI uses virtual payment addresses, like email-style IDs, so you don't need to share account numbers. It also supports QR codes, mobile numbers, and bank account details as ways to address payments. A typical UPI payment is a push payment. You open an app, enter an amount, and confirm with a PIN. The app sends the instruction through UPI rails, and both banks process it instantly. The receiver gets a notification within seconds that the money has arrived. UPI supports person-to-person transfers, bill payments, online shopping, and in-store QR payments. It also offers features like UPI AutoPay for recurring payments such as subscriptions. Newer features like UPI Lite and Credit on UPI aim to improve small payments and credit access. UPI has encouraged many non-bank apps, including big tech companies, to offer payment services. This competition has driven very low transaction costs and created many innovative business models. The Indian government also uses UPI for welfare schemes, tax payments, and public services. UPI is expanding internationally, with some countries allowing UPI-based payments for tourists. India is also testing linkages between UPI and other real-time systems like Singapore's PayNow. Overall, UPI shows how a public digital infrastructure can support many private apps on top. Next, let's look at PIX, Brazil's real-time payment system created by the Central Bank of Brazil. PIX allows instant transfers between individuals, businesses, and government entities 24 hours a day. Users register PIX keys, which can be phone numbers, email addresses, tax IDs, or random codes. These PIX keys make it simple to receive money without sharing full bank account details. PIX supports QR code payments in stores, online checkouts, and peer-to-peer transfers. Many merchants in Brazil now accept PIX instead of or alongside card payments. PIX is widely used for small everyday purchases, rent, salaries, and even some tax payments. The system has helped reduce the use of physical cash and lowered transaction costs. Like UPI, PIX uses a central infrastructure that connects many banks and digital wallets. Banks and fintechs compete to offer better user experiences on top of the PIX rails. The central bank has also introduced PIX SEPA and PIX Troco for cash withdrawal at shops. PIX Copia e Cola lets users copy a payment code and paste it into their banking app. Brazil is exploring using PIX for offline payments and cross-border use cases in the future. PIX has become a core part of Brazil's financial inclusion strategy, bringing more people into digital payments. Because PIX is so common, some scams have appeared, so education and security are key. Overall, PIX shows how a central bank can drive rapid adoption of instant payments nationwide. Now let's move to the United States and talk about FedNow. FedNow is a real-time payment service operated by the Federal Reserve, launched in 2023. It allows participating banks and credit unions to send and receive instant payments in US dollars. Unlike consumer apps, FedNow is not an app itself. It is infrastructure for banks. Banks can build their own apps and services that use the FedNow rails in the background. FedNow runs 24 hours a day, every day, so customers can move money outside banking hours. It is designed for many use cases, including bill payments, payroll, and account-to-account transfers. Businesses can use FedNow to pay suppliers faster and improve cash management. Government agencies may use FedNow in the future for faster tax refunds or benefit payments. FedNow coexists with private real-time services like the clearinghouse RTP network. Over time, more U.S. banks are expected to join FedNow, increasing reach and usefulness. FedNow uses ISO 20222 messages, helping standardize payment data and support richer information. The central bank sets rules on settlement, limits, and risk controls for participating institutions. Banks must upgrade their systems and operations to handle instant posting and customer notifications. Consumer-facing features like Request to Pay or specific mobile apps will depend on each bank's design. FedNow is an important step for bringing U.S. payments closer to always-on, real-time money movement. Finally, let's explore SEPA Instant, the instant payment scheme for the euro area. SEPA stands for Single Euro Payments Area, which harmonizes euro payments across many European countries. SEPA Instant allows euro transfers between participating banks to be completed in seconds. The service is available 24 hours a day, including weekends and holidays. SEPA Instant has maximum limits per transaction, which have been raised over time to support larger payments. The scheme is run by the European Payments Council, with oversight from European authorities. Traditionally, SEPA credit transfers could take up to 1 business day to reach the receiver. With SEPA Instant, the money arrives almost immediately, giving faster certainty to payers and payees. European regulations are pushing banks to offer instant payments at the same price as regular SEPA transfers. This is expected to increase adoption by consumers, businesses, and public institutions. SEPA Instant can be used for person-to-person transfers, bill payments, and merchant payments. It also supports corporate uses, such as paying suppliers just in time or managing liquidity. Many European banks are upgrading channels like mobile apps and online banking to support SEPA Instant. Some fintechs build overlay services, such as Request to Pay, on top of SEPA Instant rails. Over time, SEPA Instant may become the default way to send euros within Europe. Now, let's compare these systems and see what they have in common. All 4 systems aim for instant, 24/7, low-cost transfers directly between bank accounts. They differ in governance models. Some are central bank-led, others are industry schemes. A big trend is connecting national instant systems to enable faster cross-border payments. Another trend is building new services on top of these rails, like QR payments and Request to Pay. Let's quickly recap the main ideas from this session on real-time payments. Real-time payments move money between accounts in seconds, any time of day. They are usually push payments, final and hard to reverse once sent. These systems run on shared national or regional rails that connect many banks and apps. Governments see real-time payments as tools for inclusion, efficiency, and innovation. India's UPI shows how open, shared infrastructure can support many competing apps. Brazil's PIX shows how a central bank can rapidly change everyday payment behavior. The U.S. FedNow service brings instant payments into the core of the American banking system. SEPA Instant is helping make instant euro transfers a standard expectation across Europe. All these systems depend on strong security, identity checks, and user education about scams. Instant finality creates new fraud risks, so design and regulation must keep improving. For businesses, real-time payments can improve cash flow, reduce costs, and speed up operations. For individuals, they make splitting bills, paying rent, and receiving salaries faster and simpler. For governments, they can deliver support payments quickly and reduce reliance on cash. Over the next years, we will likely see more links between different real-time systems. We may also see more offline options and new services using these rails in the background. Understanding how these systems work helps you make sense of changes in everyday money. As more payments become instant, our expectations about speed and access to funds will rise. Real-time payments are not just a technology upgrade, they reshape how economies move money. Do you think this will matter more in the future?